Welcome. How's everybody doing? Thank you so much for being here. Thank you for joining me and bearing with me while I dance here in the orange mask. Folks, this is going to be part of the Trading Quotes playlist on my YouTube at Cheds Trading. I am, of course, on Twitter at Big Cheds, and you can find me on Bitcoin Live, where I am a founding analyst. And I've published 4 books, and I'm making the 3rd book completely free. That's what this series is. That's what the playlist is, the Trading Quotes. We're up to, we did 27, 28. We'll do week 28 and 29. I'll eventually do the entire book for free. While you're here, check out the Trading Encyclopedia, 3-minute videos designed to teach you really just professional TA, classical charting, Japanese candlestick theory. I've got more than 200 videos already in that playlist. And just check all this good stuff out. So let's get right into it. Basically, the format is I'm going to read the tweet, talk about it, and we'll go from there. So I hope you are enjoying this playlist, folks. So we did 27, weeks 28. So we're going to go to 29. We'll do 29 and 30. All right. Week 29, Monday. If you spend your time obsessing over old losses, you have a high probability of generating new losses. Why is that the case? You can get really down on yourself. Confidence will spiral, and doubt will snowball, right? And if you can only think about mistakes you've made in the past, if you can only think about things that went wrong in the past, you're not going to be able to see opportunities in the future. You're going to be jaded. And it's important to accept losses, to understand that it's not always going to go according to plan. We're going to try things, we're going to make mistakes, and hopefully we're going to manage our risk. And, that way we'll stick around, we'll survive, and we'll keep trading. So don't obsess over an old loss. Examine it, sift through it, get some value from it, and then move on. There's always another trade, all right? Tuesday. You don't have to be in a trade all the time. Stop feeding the need for action. The less you do, the better you will trade, as the good opportunities stand out and they grab your attention. Right? A good trading setup, it should be so obvious that it jumps up and it hits you in the face. It should just be so clear to you at first glance. That's number one, right? You don't have to always be in a trade. Sometimes we think that as a trader, that means we're always in a position. Well, a lot of times you're in no position. You're just waiting for some good opportunity, right? The need for action here. Don't feed the need for action. This is more about gambling and poor impulse control, right? Trading should be about opportunity. Some of the best traders only take 1 trade a month. For example, there's different styles, of course, but one major trade that just gives them a month maker, a week maker, a year maker, even if it's that good a trade. So the less you do, the better you'll trade, right? Stay more focused. Rather than 20 trades, 3, 4, 5 more precision trades that are based on opportunity. Okay, so just don't feed that need for action. Make sure you're responding to actual opportunity. Okay, folks. Wednesday, my best advice is to follow momentum. Don't be fancy and try to anticipate when it's going to turn around. As a trader, you want to position yourself to follow momentum, to ride the trend. So if you want to go long, you want to find an uptrend that just dipped, and you take advantage of it. If you want to go short, find a downtrend that bounced, right? You want to follow momentum. So anticipation, this can be quite dangerous to where you jump in too early. Oh, the bottom is here on the first wick. The bottom is here on the first minor bounce. You want to wait for it to turn around. Wait for it to actually give you something to work with. Follow the broader momentum. Stay with the higher time frame chart, the daily, the weekly. Don't jump to too low a time frame, anticipating a turnaround before one actually happens. Do yourself a favor, be patient, and follow momentum, okay? Thursday, stay calm. Otherwise, you're probably going to make a mistake that you'll regret later. Emotional management's really hard. It can really trip you up. If you're sad, you're angry, you're excited, any of these things can throw you off of a trade, especially so if you're not aware that you're in that emotional mind state, right? Mindfulness is incredibly important. Using a trading journal will help you do that, to stop and force yourself to examine your thoughts and your feelings every time you open a trade, close a trade. So being calm is really important. If you have trouble with your temper, you're going to have trouble with your trades, right? If your blood runs hot, then your trades will run cold, like another one of my quotes. So it's really important to stay calm, try to stay in the center, try to stay in the middle. And this is just one of many, many quotes I have on emotional mindfulness, on remaining calm, and just not overreacting emotionally, okay? Really, really important, folks. Friday. The price is never wrong, but you might be. Just don't stay that way. So, there's an argument people say with fundamental analysis, especially people say the price should be X, Y, and Z. It should be higher. The fair market value of it, the market. I mean, come on, whatever. Right? The price is what it's supposed to be, right? At any given time. It's a summation of, in any kind of public market. That's what the price is supposed to be. It's a summation of all buyers and sellers. So the price is not wrong, but you might be. Your trading idea may have failed. You don't stay with a failed trading idea. Take the loss and move on, right? Small losses will grow into big losses, especially if you let them grow, especially if you don't manage them, if you don't manage your risk. So the price is never wrong, but you might be. And just don't stay wrong. You have to take the small losses. You have to adapt. You have to manage your risk. Otherwise, there's no way for you to survive as a trader. Saturday. People quietly buy when the market is red, and they loudly sell when the market is green. Take note of this and trade accordingly. This is an interesting one from a sentiment standpoint. So a lot of people, they won't tell you when they're buying stuff, right? Because if it goes wrong, they don't want to have to delete a tweet. They don't want to have to come back and say, I was just kidding. But when it goes their way, they're going to be incredibly loud. They're going to be really obvious when the market's green, and they are loudly selling, even though they aren't telling you that they're selling. What they're doing is they're putting out a chart. Look at this thing, it's up. Look at this thing, it's up 50, 60, 70%. They're taking profit probably at that point. So people are quietly accumulating. They're not telling you about it. And then when they start talking about it, that's when you want to be careful, because they're already in the position. They're already, the market is green. They're all the way up in their position. You want to be careful of this. Be skeptical of people. And really try not to pay too much attention to what other folks are doing. You really should be managing your risk based on your own portfolio, based on your own style. All right, so take note and trade accordingly. Sunday, if you're having trouble reading the chart, move out to a higher time frame. Let the 4-hour become a 12-hour, or even switch from daily to weekly if need be. Rather than zooming in, you should be inclined to zoom out and take in that larger picture. When I look at a chart for the first time, I try not to get too wrapped into just what's in front of me, the 30, 40, 50 candles. I always want to zoom out on TradingView. I roll the mouse wheel out. I want to see a bigger, not just go into a higher time frame, but I want to see a larger candle series. I want to see more history. Price is advancing into a major level. Well, is that major level, does it correspond to a major level from a year ago or 6 months ago or some previous major level? Is the price interacting, with some market structure such that I should be paying attention? So a lot of people zoom in, like they're not sure what's going on. What they'll do actually is they'll give themselves less information. They think they're giving themselves more. Oh, I'm going to, they're not sure in the 4 hours. They switch to the 1 hour. No. If you're not sure in the 4 hour, go to the daily, or go to the 6 hour, go to something higher, go to a higher time, 6 hour, 12 hour daily. You want to zoom out. And you always want to know what the higher time frame is doing. Whatever trade you're doing, 4 hour, you want to know what the daily is doing. Daily, you want to know what the weekly is doing. You always want to know what the higher time frame is doing. So switch the time frame, switch out 4 to 12, daily to weekly, get the larger time frame, and then you can zoom back in later once you understand the broader trend. Okay? This is week 30. We're doing the entire book for free. It's my Trading Quotes book, published in 2022, available on Amazon, but you can get the entire thing for free. And you get to listen to the author talk about it while he's wearing an orange mask and dancing. So I think that's a pretty good deal. Monday, if you are up big, maybe take a little bit off the table. You can never go broke by taking profit. This is something I preach a lot about, taking partial profits, partial losses. You know, you entered in a nice breakout trade and now the price is at the next major level. Take a little profit. Every time you sell a little bit, it makes your future decisions easier because that position size represents a smaller percentage of your risk assets. Take a little off the table. Pay yourself for a good idea. And you can't go broke that way. Maybe you won't get maximum, 1,000% of the profit, but you're going to get profit. You're going to pay yourself for a good idea, and then you can let some ride. So a lot of people take no profit, and they end up round tripping the entire position. And so they get zero when they could have taken 15, 20, 30, 40, 50%, and then kind of let it ride and give it a chance to grow. So you have to lock up some profit no matter what, and you'll never go broke that way. So I'm a big fan of taking a little bit of profit if you're up big. And this is kind of like, when you send your friend a screenshot because your position is up so much. Take a little profit, okay? Tuesday, in trading, the more moves you make, the less likely it is you will be profitable. Have a plan, fire your shot, and let it play out without all the micromanaging. Now, this isn't to say, don't stick to your stop loss. What this means is fewer moves, but with more conviction. So every time you make a trade, have conviction in the trade, stick to the stop loss. If you have a stop loss, let the price either get to it or not. Don't jump in too early, overmanage it, panicking. Stick to your plan and execute your plan, right? All the micromanaging, all these extra moves, you're second guessing yourself, you're dipping in and out of the position, now you're paying trading fees, and now you're not sure what's going on. Less moves, but more precise, right? In poker, there's something called tight aggressive, which is a style I like, where you don't necessarily play as many hands, which means you're tight, but when you have a good hand, you're aggressive with it. And that's that same style I believe works well in trading. So fewer moves, but those moves are executed with more precision and more confidence, okay? Wednesday, just remember, you will have plenty of opportunities tomorrow to make the same trading mistakes you made today. I'm sorry, I laughed a little bit. I've got 365 quotes. I wrote all of these quotes myself, and I forgot about some of these. And some of these are in pure fun, like this one. And this is a thing where it's like trading's hard. It's always going to be hard. Forgive yourself for making mistakes. If you screwed up today, don't worry. There'll be more opportunities to screw up tomorrow. The good news is all those screw-ups are potential lessons. They're all potential opportunities for you to become a better trader. So this is to say, have a little fun, go easy on yourself, take it day by day, and hopefully you're not making the same trading mistakes, right? Hopefully you're making new mistakes, right? Because you don't want to repeat old mistakes, right? Old mistakes are lessons that you have refused to learn. Thursday, it makes no sense to have multiple indicators that do the same thing. You do not need the on-balance volume or the accumulation distribution index or the relative strength index or the stochastics relative strength index. Simplify your setup so that you can focus more on the price rather than the many crossing signals that these indicators offer us. So, a few things. First of all, again, all trades are originated from price structure, not oscillators. You never take a trade because the RSI is doing something or even the OBV. But those things can give you a little bit more confidence or more information to pull a trigger based on price structure. Number one. So it's all trades come from the price, right? Number two, like RSI and stochastics RSI basically do the same thing. So if you have both, one of them's going to give you a crossing signal. So all of a sudden now you're just waiting for crossing signals. And if you could, why not add five different, oscillators like stochastics, like add a MACD and add, money flow index, and then add, McClellan oscillator. Like just keep adding them. So eventually you'll get some signal from some oscillator, right? Simplify your setup. Don't have duplicative indicators. OBV and AD do the same thing. You don't need a moving average 10 and a moving average 12. Like if you have simple moving average 10, you do not need EMA 12. They're going to be very similar. Just have a simple setup and ask yourself, like, wait a minute, do I have two things that are doing the same thing? You got to be really careful. Opt for a more simple setup, price versus support and resistance, okay? Friday, the best traders are quick to realize when they are wrong. 100%. This, one of the most important quotes in the book, right? Strong opinions weakly held. I can be really convinced, but when I get new information, I'll change my mind. And the best traders are the ones that survive. And when they realize they're wrong quickly, they take a small loss before their position goes completely against them, before they get liquidated, before they lose 50%, before they take a large trading loss. You want to be quick to realize and to accept. Not just to realize. I should say the best traders are quick to realize and to accept when they are wrong, because that's a very important part of it as well. You have to adapt. It's a rule of survival, just like the animal kingdom. Trading's the same way. Saturday, gut feeling is underrated. The thing is, it only comes from the experience of watching the chart for hours and hours a day. What do I mean by this? Well, gut feeling. You should have an idea when you look at a chart right away. You should have a strong feeling. Oh, this is bullish. This is bearish. You should have a strong idea of what it's doing because you have muscle memory. You've experienced with that chart. You understand price history to major moving averages, price history to major levels. And you want to build up that muscle memory. And you should only be trading charts that you have muscle memory on, charts from your watch list, your well-curated watch list, right? Remember, we're not bouncing around from play to play. So put in the muscle memory. Muscle memory is important. Watch a smaller list of charts and really know those charts and develop that gut feeling. It really is underrated, and it can be really, really helpful, to you as you're trading, okay? Sunday, take the loss before it takes away your will to trade. This is like this one. Best traders are quick to realize when they're wrong. Take a loss. Small, I have 3 quotes, I think, in the last couple of weeks about, small losses potentially becoming big losses. Here's another one. A big loss, it could just devastate you. It can knock you out. I'm not trading. I'm quit. I'm done. I'm giving up. Don't let a loss take away your will to trade. It's your fault that you didn't stick to your stop loss. You didn't manage your risk. You didn't, and it's not every trade is your fault, right? Because you could have a good idea and it could just go against you. Okay, take the loss. But if it goes against you and you don't take the loss, and then your position's gone. That's your fault, right? So accept where your responsibility starts and ends, what you can do, and then do that. Do everything you can do to manage your risk and take these small losses before they grow and they take away your will to trade. This is week 29 and week 30, and this is part of my playlist, Trading Quotes. It's a 3rd book. I've got 4 books published. Isn't that pretty cool, folks? I'm working on my 5th book. It's Poker and Trading. That will take some time. I'm in no rush. Books take so much time to work, but I'm so much work to do. But this is my 3rd book, and you get the entire book for free. It's on Amazon, of course, but free on the playlist. And now we've done up through week 30. I hope you are. I hope you're enjoying it. Check out, Trading Encyclopedia. Check out the long form interviews. I've been on a bunch of interviews in the last 6 months. And of course, I am on Bitcoin Live, where I'm a founding analyst, and I'm on Twitter at Big Chuds. So, folks, thank you. Thank you for hanging out. Thank you for being here. And we'll finish up with a little bit of dancing. And I will talk to you soon. Let's do this.